Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. This time around, we're going to be starting off with the light crude oil futures market, which essentially over the past week failed to make a new high, as has usually been the case in the former weeks when price was basically able to make a new high pretty much every week, as we saw very commendable consistency in the uptrend so far over the last couple of months or so. But over the past week, we did not see price make a new high, and essentially what we have here is a consolidation phase. Now, if we zoom out of the chart, it's actually not hard to see why we're consolidating and why price is finding resistance right where it is right now. So just looking at this chart from a bird's eye view, we can actually see that price is basically holding as resistance right around here, which is previously in the past worked as a very, very strong support zone for price. In fact, if we just zoom a little bit further back, we can actually see that there were multiple instances when price basically found support off of this level, and clearly it's now flipping into resistance. In our last week's video, we also discussed about all these levels and how price, even if it just continues to drag on with the uptrend, is going to soon run into even more important swing lows and support areas around these marks here, which is kind of where we're expecting price to eventually head, because once again we're looking at this consolidation box here to also hold a support should price just continue to trickle further down and find more resistance off of this level. We expect the price, as it continues to, if it continues to push down, it could very easily just find more support off of this level and continue to drag the uptrend a little bit higher. Eventually, we believe that price could really just be headed into the 75 to 80 round number price levels. So that literally translates into a midterm bias for us for this market to the upside. Although we're not really hopeful for this trend to continue on for too much long. Just looking at the significance of all these swing lows and all these areas from the past, back in 2012, 11, and yeah, some swing lows in 2013 as well. So yeah, that's precisely where we think price may eventually be headed. Although obviously a lot will depend on how price basically behaves off of this resistance area, and if this resistance area turns out to be strong enough and price just continues to push down, we'll see if it's going to hold as support at this former consolidation box and the highs around here. So should these levels hold as support and price just is able to just resume this uptrend, as has been the case so far, then we may just easily see price sort of trickle back up to the 7,500 and the 80 round number over here. We've actually seen instances in the past when price was able to break past some extremely important swing highs and resistance levels, such as right over here. So we're hopeful that if this momentum just continues, we might really be able to push through this former support area over here and basically land closer to these more important round numbers and swing lows and support areas above here that may actually now turn into resistance. Okay, so the next market we're going to be looking at here is the S&P 500 E-mini futures market, which to us was one of the most interesting markets to follow this prior week, because basically we had market action unfold that we've been calling for at least for the last 2 to 3 weeks. And the reason for that is that we were basically witnessing prices rising extremely sharply right off of this point from here, which we said that the market will be very, very uncomfortable with sustaining over the long term. And so naturally we expected that this market was probably going to be welcoming some strong selling action sometime in the near future. Although we were expecting more of the selling to come in at the 2,900 or maybe even the 3,000 big round number, but nevertheless, just seeing prices sort of pull back here, it really shouldn't come off as a surprise to a technical trader who's informed and who understands trend dynamics. So if we zoom out of this chart here, we can quite clearly see the transition that we're talking about here. Although this market has been in an uptrend for a very long period of time, knowledgeable technical traders will be able to see how we've basically transitioned from a market that's trending, but it's trending in a healthy fashion in terms that we're seeing we were seeing more regular but non-threatening pullbacks that you would normally expect in a decently strong uptrend. And basically, we just, over the recent past, transitioned into a market that was just beginning to rise very, very steeply with little to no pullbacks at all. And usually when the markets are rising or falling that sharply, it's hard for the markets to sustain that kind of momentum. And more times than not, you will witness that prices will reverse that momentum in the opposite direction. That's precisely what we're seeing here. Just as hard as prices were rising over the past couple of weeks, this past week we're seeing prices fall just as hard. And the reason for that is that, of course, such a sharp rise in price levels basically creates a vacuum, or sort of a vacuum, for price as it reverses into the sharp move up here, because now there are no major support and resistance levels created by former swing points, such as it would have been in case that this trend was more normal in terms of frequent pullbacks. We could possibly have had a former resistance point that we could have expected to turn into support and allow prices to once again pull back. But what we're looking at here is basically sort of a vacuum for price, in terms of there are no major support and resistance levels over here in the recent past that we can expect price to hold up at. The only major, or really the first level that we think the price may potentially hold at now is right around the 2700 level, which is this really minor resistance level. Although we're still long-term bullish on this market, and we still believe that the bulls are still clearly the dominant force in terms of more longer-term direction for this market, really we think that a lot will really depend on how price behaves as it really moves into the 2700 level, if it does, of course. And basically, if we're then able to hold a support here, we may just continue back up, and who knows, maybe even resume this uptrend now that we've had a major pullback that this market was long due. On the flip side, we could even just continue trickling down, because like we said, this isn't really a very strong area. It is the first area that we believe that price may potentially hold as support. But it's clearly not a very strong area. A more stronger area, for example, would be a level like this for us, which would be roughly on the 2500 level. Although we really wouldn't want to call the prices are going to fall to that level just yet. Again, a lot will really just depend on how price behaves as it basically hits the 2700 first trouble area. Once again, we'd just like to clarify that we're not exactly calling the top on this market as yet. Although this is a major pullback into the market, we still believe that this market is headed to the upside, or at least we do not have any major indications to suggest that this long-term uptrend is going to entirely reverse on itself. What we're seeing here is basically a much needed pullback, and as of now, really, that's what we expect it to be, just really a pullback. Okay, so the next market we're going to be looking at here is the gold futures market, which for the most part of last week was bearish. And if you look at the technical indications here on the chart, it's not hard to see why prices were bearish and why the market did what it did. So in last week's video, we had talked about how price had pushed past this major former swing high over here, although there was still a more longer-term swing high that had yet to be broken. And aside from that, we had talked about how the candlestick that basically pushed past this former swing high was not able to close above this level strongly, and it basically had a weak close, and that it suggested that even though it looks like a breakout of this former swing high, it may not be a breakout at all, as we just really have strong indication of selling coming to the market here. We also talked about how this was still a 50-50 thing, because if you look at this consolidation box here, we talked about how the mid-level of this consolidation box, which also sort of lines up with this former swing high that we're looking at in the first place, this level we said may actually hold as support as well, in case that we see price pulling back down from this level. and it may just hold as support, and we could potentially see price then just continue its way up and maybe test this more important swing high over here. So what we have unfold here actually is price basically dropping into this level. We momentarily for a day basically held at support at this level, and then prices just continued to drop down, which basically suggests that this level really did not hold, or at least for now it's not really held as support at all, and price has just been able to drop down hard. This last close on Friday was a strong one as well, once again suggesting that momentum is clearly with the bears for now. Also, this means that if on Monday we do see a quick pullback to this level, we may actually now hold that as resistance at this level and then just continue our way down. Ideally, we would like to see price now basically hit these levels around here. Once again, this is a very important former horizontal support and resistance level. We have multiple indications of support and resistance off this level. We had major resistance coming here. We had resistance almost coming off of this area over here, and we had resistance right around at this point as well. So that's where we think price may just end up landing. Of course, this is also very close to the 1300 round number, so that's really our midterm bias for this market for now. We do expect that price will probably try and test the 1300 level, and really if that round number coupled with this all important horizontal support and resistance level hold as support, we could potentially head back up to test these levels, basically 1350 levels around here. Once again, maybe even break it to the upside and eventually test this swing high. Or on the flip side, we could just continue chopping around as we've been doing over the past many months. So really just in the following weeks, we expect price to probably trickle back down to close to basically around the 1300 round number. And depending on how that level holds, we could either see prices bouncing back up, or we could see more choppy price action in terms of price just oscillating around the 1300 level. So we now look at the Euro futures market, which in the past week played out pretty much like the crude oil futures market. We weren't able to see a new high on this market, as has been the case in the former weeks when price was basically making a new high pretty much every week, as we were seeing a very, very strong uptrend develop. Over the past week, however, we noticed that price was pretty much sitting at a former horizontal support and resistance level. That may just continue to prove its worth, and that's what we're seeing this week. So right around the 1.25 level, we had a former support area create here and a former resistance area create right off of this level, and that's precisely where price is holding for now. In fact, last week we witnessed the formation of a very, very strong bearish candlestick pattern, which was the bearish hammer or the bearish pin bar pattern, and we also noticed that it was authoritative in the sense that we had a very long wick to the upside on this candlestick pattern, which made it look threatening, although we said that we wouldn't expect this pin bar to do much at all because should price trickle down, it had a very strong chance of basically holding as support off of this former resistance level. And of course there's all of this bunch of mess and consolidation right to the downside here, which really shouldn't allow bears to take control for a long period of time in the strongly uptrending market, and that we just expected price to eventually just continue to trickle higher, more towards the longer term support levels that we identified. We're going to do that again right now to refresh your memories and to reiterate our bias for this market. So essentially what we're looking for price to do here is to basically hit the 1.28 level around here. Once again, a very, very significant area in terms of former resistance and multiple instances of support off of this level. And that's precisely where we believe price is eventually going to be heading. And we just continue to hold that bias for now. Okay, so finally we look at the 10-year Treasury note futures market, which over the past week just was able to build on the bearish momentum that we had seen sort of triggering off the week prior. So basically for this market, we've been able to break through this extremely important former support zone marked by these multiple instances in the past where price was able to hold as support at this level right here. Price was able to basically close below this level and just continue on to build more bearish momentum to the downside. Going forward, we obviously expect price to hit the 120 round number, which is just underneath where price is right now, which we could possibly see literally the following week. For more longer term targets, where we need to zoom out of the chart, and we see that we have a level right here that we could eventually expect price to hit if this bearish momentum just continues to build on. Although we can see that as we zoom out the chart, we see that we're basically sitting right on top of this consolidation box right now, which makes things a little bit more uncertain, because we know that these consolidation boxes in themselves can act as support and resistance levels. So if we do not see major hindrances coming in as price basically moves into this consolidation box, into the area where we had this consolidation box, we may actually just see price continue to trickle down and basically hit the 118 level, which is right around the low of this consolidation box. And if we're able to build even more momentum, we could eventually see price basically hitting this next major area of support, marked by these three major swing lows that we had here in the past back in 2010. Obviously, a lot of that will really just remains to be seen, and we're not really calling this market to drop that far just yet, because like we said, a lot will really depend on how price behaves as it moves into this consolidation box. Although we do still believe and have an expectation that price will probably be able to hit these lows around here if we're just able to sustain the bearish momentum that price is now starting to gain on starting this prior week.